Polymarket is adding Chainalysis surveillance to detect insider-style trading, fraud, and manipulation across its prediction markets. The timing matters because prediction market volume has scaled fast, and integrity controls become more important when more money depends on event outcomes. Polymarket taps Chainalysis to turn public blockchain records into a monitoring layer. Every trade and settlement already leaves a trail. The new question is how that trail gets used for enforcement. The confirmed context is the platform upgrade. Polymarket's April 28 overhaul introduced CTF Exchange V2 smart contracts, a rewritten central limit order book engine, and Polymarket USD, or pUSD. pUSD is an ERC20 collateral token on Polygon backed one-to-one by USDC, with trading still settling in native USDC. That matters because surveillance is landing alongside deeper infrastructure changes. The platform is not only watching behavior, it is rebuilding the trading and collateral stack around that monitoring layer. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is public data. Prediction markets already record trades, positions, and settlements on a blockchain. Chainalysis tools can use that history to search for abnormal behavior, trace funds, and create evidence for internal reviews or law enforcement engagement. In plain English, the transparency that made on-chain trading visible is now being turned into a compliance system. That is powerful, but it also requires careful detection so normal informed trading is not confused with abuse. The affected group is traders, market makers, and any institution considering prediction market exposure. Polymarket has recorded very large activity, including a single-day high around $425 million and more than $7 billion in monthly volume this year. At that scale, manipulation concerns become more than a reputation issue. Market integrity rules can lead to reviews, bans, and referrals. Trust becomes part of the product because users need confidence that outcomes are not being shaped by insiders or abusive trading patterns. The unresolved question is accuracy. Prediction markets naturally attract traders who believe they understand an event better than the crowd. Some of that is legal edge. Some activity can cross into manipulation or insider knowledge. The system has to separate those cases without turning every sharp trade into a violation. That is why enforcement evidence matters. A surveillance tool can flag patterns, but credible action still depends on proving what happened and why. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is enforcement. Polymarket taps Chainalysis, but the real test is whether suspicious activity is identified, reviewed, and handled in a way that traders understand. Watch for rule actions, law enforcement referrals, pUSD migration results, and dispute trends as volumes grow. If surveillance produces clear cases and fewer integrity concerns, prediction markets look more institution-ready. If not, the platform still has a visibility layer, but not yet a proven trust layer.